Welcome back to Cash Corto. Today we delve into the contrasting worlds of traditional gold and innovative Bitcoin. As we navigate through technological advancements, these assets represent not just investment options, but also the shifting perceptions of value and security. Join Cash Corto in this journey to uncover the dynamics of gold and Bitcoin, exploring their role in the evolving investment landscape. Get ready for a concise exploration of history, technology, and potential futures, all aimed at broadening your understanding of these diverse investment paths. Let's dive into this exciting comparison where the past and the future of investment converge. Starting with gold. Gold's reputation as a steadfast store of value stretches back through millennia, serving not just as a foundation of wealth but as a cornerstone in the architecture of economic stability across civilizations. This precious metal has woven itself into the fabric of human history, symbolizing wealth, power, and even divinity. Its intrinsic value is derived not only from its scarcity and aesthetic appeal, but also from its unique properties: durability, divisibility, consistency, and portability. These characteristics have cemented gold's role in economies worldwide, transcending cultural and temporal boundaries to emerge as a universally recognized standard of wealth. The appeal of gold as a hedge against inflation and currency devaluation is deeply rooted in its historical performance. Unlike fiat currencies, which are vulnerable to loss of value through inflation and can be printed at will by governments, gold's supply is limited. It cannot be created or destroyed by policy decisions. This scarcity combined with its demand ensures that gold maintains its purchasing power over long periods. In times of economic uncertainty, when trust in paper currencies wanes, investors flock to gold, driving up its price and reaffirming its status as a safe haven. Moreover, gold has consistently demonstrated resilience during economic downturns. Its price trends over the last few decades provide a compelling narrative of stability and growth amidst financial turmoil. For instance, during the 2008 financial crisis, while stock markets plummeted and real estate values crumbled, gold prices soared, offering investors a protective buffer against the storm. This trend was not unique to the 2008 crisis. Historical data shows that in periods of high inflation, geopolitical instability, or currency devaluation, gold prices tend to rise, providing a refuge to investors seeking to preserve their wealth. The steady increase in gold price over the years reflects not just its enduring appeal but also a growing recognition of its role in a diversified investment portfolio. As economies around the world have expanded and as new wealth has been created, demand for gold has surged, not only for investment purposes but also for jewelry, technology, and a central bank reserve. This demand, coupled with the finite supply of gold that can be mined, has contributed to its price appreciation over time. In analyzing the historical and economic underpinnings of gold's value, it becomes clear that its role as a reliable store of value is not a relic of the past but a continuing saga. As we navigate the complexities of the 21st century economic landscape, characterized by rapid technological advancements, shifting geopolitical dynamics, and evolving financial markets, gold's timeless appeal as a symbol of stability and security remains undiminished. Its ability to act as a hedge against inflation, a safeguard against currency devaluation, and a beacon of safety during economic upheaval underscore its unmatched position in the hierarchy of investment. Now, looking at the Bitcoin. The pioneering cryptocurrency introduced in 2009 by the enigmatic Satoshi Nakamoto, has charted an extraordinary course from its inception. Initially valued at a fraction of a cent, its ascent to unprecedented heights, particularly during the COVID-19 pandemic, has been a spectacle of the digital age, earning it the title of digital gold. This comparison to gold, however, extends beyond mere nomenclature. It's representing a shift in the perception of value, from the tangible to the digital realm, As the world grappled with the pandemic, traditional economic mechanisms flattered and the digital economy surged. Increasing Bitcoin and pushing it into the spotlight as a new asset class that combines the scarcity principle of gold with the innovation of digital technology. Bitcoin's journey is marked by its decentralized nature, free from the control of governments or financial institutions, offering a form of financial sovereignty that appeals to a broad spectrum of investors. Its underlying technology, blockchain, ensures transparency, security, and immutability of transactions, further bolstering its appeal. The COVID-19 pandemic in particular accelerated interest in digital currencies as investors sought alternatives to traditional investments amidst the uncertainty. The pandemic highlighted the potential of digital currencies to act as a hedge against economic downturns, much like gold but in digital format. This period saw Bitcoin reaching all-time highs as it became a focal point for investors looking to diversify their portfolios with digital assets. Despite these similarities, the volatility of Bitcoin contrasts with the relative stability of gold. Bitcoin's price is known for its dramatic fluctuations, with swings that can occur on a daily basis. This volatility is emblematic of Bitcoin's speculative nature and its sensitivity to market sentiment, technological advancement, regulatory news, and macroeconomic factors. Unlike gold, which has centuries of historical data underscoring its stability, Bitcoin operates in uncharted territory, with its value heavily influenced by investor perception and speculative trading. During periods of economic stress such as recession or geopolitical tensions, Bitcoin price movement has been unpredictable. For instance, while it has seen significant gains reflecting its potential as a digital safe haven, it has also experienced sharp declines, underscoring the high risk nature of this asset. This volatility is partly due to the relatively small market size of Bitcoin compared to the traditional assets, meaning that even minor events or changes in sentiment can lead to a significant price movement. Moreover, the speculative nature of Bitcoin is amplified by its position at the forefront of technological innovation. Developments within the cryptocurrency ecosystem, such as forks, regulatory changes, or the emergence of competing cryptocurrencies, can have immediate and profound effects on its value. Additionally, the influence of social media and high-profile endorsements or criticism can lead to rapid shifts in market sentiment, further contributing to its volatility. In analyzing Bitcoin's volatility, it is crucial to recognize that this characteristic is a double-edged sword. While it represents significant risks, it also offers substantial rewards for those willing to navigate its turbulent waters. The speculative nature of Bitcoin, combined with its sensitivity to market sentiment, makes it a unique and dynamic component of the modern investment landscape. As the digital economy continues to evolve, understanding the factors that drives Bitcoin's volatility will be essential for investors looking to capitalize on the opportunities presented by this digital gold. Gold's status as a highly liquid asset is undisputed. Its global trade in various forms such as bullion, coins, and exchange-traded funds (EFTs) is underpinned by well-established market dynamics. The liquidity of gold is facilitated by its universal appeal, historical significance, and the sheer volume of transactions across different markets. This liquidity ensures that gold prices are relatively stable, influenced by supply-demand fundamentals, macroeconomic indicators, geopolitical stability, and inflation rates. The global gold market operates on a continuous basis, allowing investors to buy or sell with minimal impact on its price, which is a testament of its deep and resilient market structure. In contrast, Bitcoin, while boasting a revolutionary digital platform for trade, encounters liquidity challenges that stem from its finite supply and market concentration among a limited number of holders or whales. These factors can lead to significant price volatility when large transactions occur. However, the market dynamics of Bitcoin are rapidly evolving, As it becomes increasingly compared to traditional assets like gold, we are witnessing a broadening of its investor base and a diversification of its uses, which in turn enhances its liquidity over time. Digital asset exchanges and institutional investments are making Bitcoin more accessible, although it still trails behind the liquidity level of gold. Gold's utility extends far beyond its role as an investment vehicle. Its physical properties make it indispensable in industries like electronics, dentistry, and jewelry. This industrial and aesthetic demand underpins its intrinsic value, providing a floor for its price. Conversely, Bitcoin's utility lies in its ability to facilitate digital transactions, underpin decentralized finance, and potentially revolutionize fields like smart contracts and tokenization. This positions Bitcoin not just as a store of value but as a foundational technology in the digital economy. The regulatory environment for both assets is varied and complex. Gold's regulatory framework is well defined and universally recognized, facilitating its use and trade worldwide. Bitcoin, however, navigates a more challenging regulatory landscape with concern over security, privacy, and financial stability, leading to a patchwork of regulations across different jurisdictions. These regulatory challenges reflect the novelty of cryptocurrency and the evolving understanding of its implications for the global financial system. The risk-return profile of gold and Bitcoin highlights their appeal to different investor sentiments and segments. Gold, with its lower risk and lower return profile, is favored by conservative investors focused on capital preservation. Its price stability and historical performance during times of economic uncertainty make it a safe haven asset. On the other hand, Bitcoin's high volatility and potential for significant returns attract risk-tolerant investors looking for capital appreciation. The speculative nature of Bitcoin, coupled with its potential for rapid price movements, can offer lucrative opportunities but also poses a higher risk of loss. Investor sentiment towards gold and Bitcoin is indicative of broader trends in market adoption and investment philosophies. Gold continues to be a mainstay in diversified investment portfolios, appreciated for its stability and role as a hedge against inflation. Bitcoin, however, is carving out its niche, especially among a younger, more tech-savvy demographic. Its increasing acceptance by institutional investors signals a growing recognition of its legitimacy as an asset class. This trend is reflective of a broader shift towards digital assets, driven by technological advancements and changing investor preferences. If you are looking at the environmental consideration, the environmental impact of mining for both gold and Bitcoins are increasingly under scrutiny. Gold mining is associated with significant ecological disruption, including habitat destruction and water pollution. Efforts to mitigate these impacts include improving mining practices and increasing recycling of gold. Bitcoin mining, known for its intensive energy consumption, faces criticism for its carbon footprint. The debate over Bitcoin's environmental impact is prompting a search for more sustainable mining practices and the use of renewable energy sources, highlighting the need for balance between technological innovation and environmental responsibility. As we look to the future, gold and Bitcoin each face unique challenges and opportunities. For Bitcoin, technological advancements and broader market adoption could enhance its utility and acceptance. Although regulatory developments will play a critical role in shaping its trajectory, gold, with its enduring value and status as a safe haven, is likely to remain a key component of investment portfolios. Though its performance will be influenced by global economic conditions and technological innovations in mining and recycling, the juxtaposition of gold's timeless appeal with Bitcoin's digital frontier encapsulates the evolving landscape of investment, where tradition and innovation intersect, offering diverse opportunities for investors in pursuit of value and security. In conclusion, both gold and Bitcoin offer unique advantages and disadvantages. Your choice between them should consider your financial goals, risk tolerance, and investment horizon. It's not a question of either or, but of how each asset fits into your overall investment strategy. We encourage you to conduct further research Consult with financial advisors and stay informed on market developments. Remember, investment and investing is not about following the herd, but making informed decisions that align with your financial goals. Thanks for watching, and don't forget to like, share and subscribe for more insightful content. Cash Corto, signing off.